So this is execution for 2024 and Conversion Lab. So every 2 weeks, I run a training program for LeadHook users called Conversion Lab, where they just jump on the call. I'll share something new that I've learned in the last fortnight, and then open it up to Q&A, and the calls go in any direction that they want to go in. I've been in business for about 30 years now, and there's not too many problems that I haven't fixed. I was in investment banking, and then I got into from investment banking into consumer goods, pharmaceuticals, personal care. So we did a lot of offline marketing, TV ads, radio ads, all that sort of stuff. And then I transitioned to the online world. I developed a couple of brands. One of those is this skincare product. This is what resulted in the creation of LeadHook itself. I was working out how do you frame a product that applies to so many people and still make it specific. Ended up being the first version of what you would call quiz funnels these days. This is back in 2013, but we were doing personalized sales letters based on how you answered the quiz, essentially. And that turned into LeadHook as the product. There's a guy out of New Zealand by the name of Mark Ling. He invited me to a mastermind in Niagara Falls. I presented what I was doing, and about 40 people lined up, said, "Hey, how do we sign up to this thing?" And I said, I didn't realize people were interested in buying this. So I flew straight to Dubai, got my dev team in a room and said, "All right, guys, let's go build LeadHook." So that essentially is how LeadHook was born. And today we've got a couple of thousand users, and this is an outcome of all that stuff. So I've reviewed well over a couple of thousand funnels by now and quite a few businesses. So, right. So that essentially my best wishes for a bumper 2024. And obviously, if you're starting 2024 in the same way as you ended, then Conversion Lab is for you. Essentially, this is for the audience that I have who really just year in year out just keep spinning their wheels and never really progress, and they don't quite work out what to do, and they're fixing their problems through tactical things. So last year was starting to AI everything, and so somehow if you just put AI into a business with no direction, and all of a sudden AI will fix it. AI won't fix that problem. So I'm finding, and so that essentially is what this is all about: is how do you get yourself to walk in a direction where you're going to get the most likely outcome or get the highest ROI. So especially if you're hoping for massive results. So what's so special about this Conversion Lab? It's a little bit different to. I review lots of funnels in many verticals, see common mistakes, and a lot of the fixes or the things that I help with is at the funnel level, the marketing level, and you don't really get the chance to fix the business level stuff. And so if you do fix those hurdles, yeah, you'll get some release, you'll get some payoff, and you'll get some growth until the next hurdle. And at some point, you'll reach a situation where it's no longer a marketing problem. And now you need to start addressing issues of operation, issues of financing, issues of team, and those ones are where people kind of get stuck. So they'll get to 1 million, they'll get stuck. They get to 5, they get stuck, or they'll get to even 10, and then they get stuck, or some other aspect of business, or on a personal level, right? So the unpopular conjecture. And this came about of my work with a company that I was consulting with. They actually are listed on the ASX now. And I was talking to the CEO every couple of months. We talk about marketing. And it became very apparent that their growth strategy was never going to be marketing. It's just to acquire the competitors. And that's what they did. So it was a private equity play that did not have much marketing at all. And they grew to $2 billion market cap with very little marketing. And yes, while they had some marketing, so the point is that at some point you need to solve other problems that marketing does not solve, and at some point through luck, testing, or consulting, you will solve the marketing problem. Like for example, we got Mel Emery on the call. You know what? He can help you solve your marketing problems, and if you are in the game enough, you're going to find some way of the jigsaw puzzle just works, right? But marketing can turn into a hammer to solve all other problems when you've got a problem of scale. So, for example, one of the issues that I helped with the call center recently, where they're getting tons of calls, and they said, "Oh, we need more calls." And I said, "Well, I don't know. Do you really need more calls? What's your conversion rate look like?" And it looked like, and so what happened in their case is is the conversion rates were quite lopsided. So I said, give me data on the call center agents and who's converting what. And we saw that there was average across the board was the same, pretty similar conversion. And I said, now hang on, let's go one level deeper, where we did a geographic profile. So we looked at to see, this was in the US, so people from Los Angeles, how they converted with people from Los Angeles. We looked at racial profiles, so Hispanic versus any other type of Americans that there are, and who they converted with. And what we found was each person increased their conversion rates if you gave them the right type of person. So typically, most call centers, what they do is they will distribute the call based on the next available person. But imagine if you found that if you had a Southern accent, for example, and you matched someone from the South to a call center person from the South, all of a sudden your conversion rate improved. So when we sliced and diced the data, we realized that inside this data set, there's a lot of gold. And so the fix was not to increase the number of calls, but to just route them to the right person. And that only came about as just a fluke. I said, do you have conversion data? And thankfully, they're a large call center for insurance, so they're doing about a couple of $1 million a year in revenue. So that essentially was the fix. So it wasn't a fix so much of let's go write better copy or more ad or whatever. It was an operational level realignment. Let's send the right person to the customer to the right conversion agent, and that essentially is how that got fixed. Right. So, or media buying. If your thing's the media buying, then every problem is let's run another Facebook ad or another creative. Right. So lessons from Exit SOS. So late last year, one of the things that I plan on doing in 2024 is to acquire more business again. So my background's in M&A, and I want to get back into that to buy out businesses that bolt onto Leads Hook. And so I released a program called Exit SOS. I have not done, I've done one, online acquisition. I've done quite a few offline acquisitions. So I wanted to sort of, see how can we turn this business around really fast? So a turnaround situation. So I released I released a consulting program called Exit SOS. And I've been involved in quite a few turnarounds, either in my own businesses or other businesses. And I wanted to get back into buying, so create a framework for working with a variety of businesses who want to exit. That was the positioning. Now, exit is just an excuse to create massive value. And the group is made up of businesses where the revenue is ranging from 500,000 to about 10 million a year. One person to our 12 person team with external providers, outsources, VAs, that sort of thing. But they're all in large verticals, which is where Leads Hook is a good fit, which is finance, debt, insurance, solar. And so they came from those sort of markets, and we're looking at B2B and B2C. We've got Australia, New Zealand, US, and UK is covered in that sort of country-wise. And so the focus was on moving the needle, without FOMO. And that's exactly what was happening. Every person that I know was running in some new direction. I'm going to put AI into this, or I'm going to do that. I'm like, now hang on a second. Let's just get the strategy right. So the first thing I wanted to sort of cover is the truth was that bottlenecks grow with scale. So what got you to $1 million will not get you to 5. What got you to 10 is not going to get you to 100. And every hurdle needs a different solution. And it's not always solvable, which is, if you're a marketer on the call, then it's always marketing is going to solve an issue, when sometimes it's a capacity problem they want to fix, or any other sort of business type stuff. So the 6 categories of wins that we've been able to come across in Exit SOS. First one is making sure we're walking in the right direction. Second one is insights, tracking and analytics. Third one is the operational fix. Fourth one is finance. Fifth one is team. Sixth one is marketing. And this is where you go offers, copy, funnels, ads, and media. This is the one that I won't be covering off much today, because most of my audience, or most of the people who are on the call, would have a marketing expertise. That's not to say we can't optimize there, but I won't cover much of that on this call. Okay, so in my own experience, and I've got a couple of business I focus on return on invested capital. So how much money have you put into your business? And I've grown businesses to where we're getting up to 60% return on invested capital. So you put $1 million in, you get 600,000. You put 10 million in, you get 6 mil out. And how do you do that? None of those things were ever fixed in this example. It was a consumer goods that was only marketing. So we launched new products, and we did fix the marketing side. That's a given. We had technology investments for working capital and inventory management. We trained everybody up to operate at a certain level. Everybody who came in went through the same basic training. So I realized when I joined the company, I audited the team that was there, and there is massive gaps in technology, understanding. They couldn't know how to use Excel, and every week I would run training sessions but the whole company had to go through. This is back in the mid 2000s, Excel and Word training, and basic finance training with a third-party company that I hired, and everybody had to go through that, including the guy in the warehouse. Because what I'm trying to do here is get their thinking operating, and so we enhanced that, and then we had exceptional market research data. So this was a consumer goods company, so we would get the Nelson retail scan data, or its equivalent. I can't remember the exact company we used, and we'd look at what to gain understanding of retail data, to understand what are the different categories within a space. So, for example, let's say if you're looking at hair gel, or you're looking for snack foods, who's selling what, how are they selling, what categories are moving, what categories are not moving, and then based on that, we would look for categories that did not have a lot of marketing advertising and was largely dormant, and we release a new product in that. We launched about 16 consumer products. We had 15 wins out of 16 launches. The one that we bombed is where we got arrogant, and we didn't do the market research. So yeah, it just goes to show that even after many launches, you still want to stick to the basics. Anyway, that is so when you optimize everything in your business, it starts printing money basically, and that essentially is what this was about. Now, if you have any questions, feel interject or add into the comments here. More than happy to answer questions as we go. Right, so the fundamental law of business is success follows a fat tail distribution. A lot of things don't work, and some things work really well. And we have a suboptimal bias towards stuff that pays off today. Everybody just wants to do, what can I do today that's going to, give me a fast payoff? Oftentimes, you need to invest that's going to pay off in 6 months or 9 months or 12 months or even longer. And we covered that in Finance SOS, which is a course that I did, last year. Right, here's someone who was getting up to 200,000 leads a day, and then at this level they had a lawsuit, so they had to turn down the campaign. I believe they were doing about $60 million worth of loans a day. It was a debt funnel, and while this graph is because the scale is quite small, what we don't see is the 6 months that the person spent in optimizing how they're going to scale this thing out. So they spent 6 months, pretty much you could call it R&D if you wanted to. They're testing different offers, different traffic sources, different ways of a long funnel, short funnel, all this sort of stuff. And then they finally just launched. How it came onto my radar is one day we just saw this massive increase in traffic on this one decision tree. And I was like, what the hell's going on here? We thought it was a DDoS attack. It wasn't. It was someone buying so much media that it actually, and they pushed the to 200,000 leads a day. The platform handled it pretty well, which was good. And I jumped on a call with the person. I said, hey, what the hell are you doing? And what's going on here? And how can I help you better? So the point is that I don't know too many people who'll do 6 months of testing to scale to 200,000 leads. They just won't. Most people will test for 5 days. If your Facebook ads don't work by next week, they're out the door. Onto the next big thing, and not realizing that there's a learning cost involved whenever you're trying to break into a market. So, and these are actual, this person came in with a lot of expertise in the market. And that is the structure that I'm seeing of the guys who are moving volume. So the biggest LeadsHook user spends about $1 million a day in ads. I know quite a few people in the 1 to 5 range per month spend. And they all have this playing the long game sort of focus to what they do. Right. So strategy, that's the first thing I want to cover, is the choices. And while there's a lot to be said for strategy and a lot of fancy words to describe it, they're basically choices you make to maximize the odds of winning. That's it. That's all strategy is. Right. So what business are you in and why? And here's why you're going to play this game. So really answering the question is, why am I playing this game? And here's how we're going to be better than everyone else at serving this small group of people. that, or this class or group or cluster of customers. And it has to make sense to you, and it has to be for you. This is probably the most important part of strategy that I see missing. Because what happens is I can show you, here's my new TikTok technique, here's my Facebook tactic, but should you play that game? Because it obviously works for the person who's selling it or the person who's introducing it, but is that really for you? And that's why there's a cross section that you have to do. The cross section is, what does the opportunity look like, and do your capabilities allow you to leverage that? And it may or may not be that. All right. So according to a survey of 700, this is from Forbes, I believe, of PwC, only 8% of leaders said they excel at strategy and execution. And this is at the top end of town. But I'm like, with the MBAs and hundreds of consultants, if only 8% think they're good at the strategy execution thing, I can almost guarantee that does not exist at our small business level. And that's essentially and that mirrors what my experience has been working with hundreds of businesses. Is either they're great at execution, here's the thing, let's go do it, but realizing they haven't thought about why we're going to play this game, right? And this you can't split test, because the strategy has to be in line with what your strengths are. So it's all action, no strategy kind of a situation. This is offer X is paying out $200 per lead, per sale, per customer. Let's go. Should you be playing that game? Nobody asked that question. What offers can I run, and what's a good market? My most common question: jump on the call. What offers can I run? And the answer to that is, well, I don't know. This offer works, but is that for you? Do you have the same strengths that they have? Right now, I use this bus driver example because it's exactly what happened. There was someone was selling a program, a mastermind type of a thing. I believe they were charging about $15,000. Someone joined their program, and this is just post-COVID, I think, after the second lockdown here in Sydney. And we jumped on a call, and somehow he ran into Leeds Hook, so he signed up. And I said, "What do you do?" Because I was a bus driver until recently. And I said, "Okay, so you've been doing all this marketing stuff as a side hustle?" And no, he did not. So he was a person who had literally no experience in anything to do with online marketing, let alone marketing. And somehow I'd been convinced that he can go into something like solar or debt refinance and within 2 weeks generate leads. The worst part was that he'd actually convinced someone to pay him a whole bunch of money to supply 100 leads in the next fortnight. And this was a situation where he was going to get killed. So I canceled his account right away. And I said to him, I said, you're better off refunding the money if you can, because there's almost the probability of you getting leads in the next 2 weeks based on where you are is zero. Because you want to go play in the biggest and baddest markets and you've got no experience running any traffic or any marketing, anything of that sort. So that is, it has happened more than once, actually. So it assumes you've made the optimal choices, or you can't buy the money, love, speed nonsense. And as much as, I'd love to put that on every close that I do, there's an element of BS about the whole thing as well. Because where you're supposed to, suspend your critical thinking and just buy. The point is sometimes just rushing into things is going to cost you more. I mean, clearly COVID showed us that we've done a whole lot of stuff where we rushed into it, ended up being a disaster. Right. So we're all fed with a lot of this BS around just taking action. Where I've always gained is, let's step back. Let's think of this thing through. What are the choices we have? Let's pick the optimal choice and then go execute, rather than just run it the very first thing that you see that you should be running after. So everyone is optimizing and doing stuff rather than doing the right stuff. Right. So start from your strength of yourself and your business. So your existing temperament, a network, and capability which of these things do you bring to the table? There's a great study done by a professor in the US. Her name was Saraswati, and she wrote a paper called "What Makes Entrepreneurs Entrepreneurial." And what she found was while at the enterprise level they kind of do this whole strategy thing and then they just execute. What she found was the people who came from the entrepreneur world, they would look at, whether intentionally, unintentionally, what can I leverage that I already have? Because obviously money is not rarely an average at the entrepreneur level. I mean, yeah, you can get funding these days. Things are getting easier, but usually they're trying to leverage off either a network or an industry understanding or something. And so you want to do that sort of an audit on yourself, right? What are your weaknesses? What markets do you have an edge in, an advantage in? Most people never ask that question. They look to see, oh, this new AI bot is going to work. Cool, let's go do AI bot. Oh, blah, blah, blah is doing well in solar. So let me go do solar. Well, hang on a second. What do you know about solar? Oh, what do you know about the industry? Nothing. Okay, well, your edge is not there to someone who's come from that space. That doesn't mean you can't learn these things, but why needlessly go into a market where you don't have an advantage in when there may be something that you have a massive advantage that is right within your within your capability. So the success is the overlap of your strengths to the opportunities that you see. That's essentially is what the essence of strategy is all about, right? So in my case, I'm working with someone right now. He's a media buyer with a very good relationship with his ex-employer, and they're in the insurance type of a market, right? No need for credibility. That's his network, ex-employer. So he went to the employer and he said, so we jumped on a call and he said, listen, I don't have cash to scale. And I said, all right, let's, who are you selling to? Who are you selling the leads to? He said, oh, my ex-employer. I said, how long were you with the employer? He said, about 3 years. I said, cool. Does he know you, like, and trust you? Obviously he does. Well, why don't you tell him to just pay you advance payment? He said, I never thought of that. So his employer is giving him 7 days advance payments for the leads that he's supplying. Cash flow problem solved. He's got all the money in the world to scale his traffic now. As long as the quality of the leads doesn't drop, no longer cash constraint. And that came about as a result of leveraging of just asking a question is, tell me a bit about you, what you do, and what are your strengths? What strengths do you bring to the table? And those sort of easy wins are there in a lot of businesses, right? So leverage your prior market knowledge, know-how, and how funnels work in that space is probably the biggest win that anyone has, right? There was there's a company that I worked with. They were great at SEO. They said, hey, Nick, can we get some consulting with you because we want to get into pay per lead. We're hearing about pay per lead. Seems like it's an easy win. Everybody's making money out of it, yada, yada, yada. We want to get into pay per lead. I said, okay, let's jump on a call. She jumped on a call. I said, what do you guys do right now? He said, oh, we do SEO. And they're doing 10 mil a year from SEO. And I said, okay, well, before we jump into pay per lead, why don't we analyze your customer base? They said, oh, sure. So we dumped all the customer data into an Excel spreadsheet. We did a pivot table. And we looked at to see where they were making bulk of their money. And there was found about I don't know, 50 or 60% of their money was coming from the legal space. And I said, why don't you just get more legal clients? And so we never really thought of that. So we architected a platform where we, rather than saying, let's do SEO in the legal space, we called it conversion SEO. Because all they were doing is they were adding, previously it was just a bunch of articles saying, contact us. We did a bunch of articles and we added in essentially a lead look form that allowed you to profile the person to see if there was a case that the lawyer would be involved with. That's the only change we brought in as far as the lead hook part was concerned. And they realized they had an edge in legal, and they went and got another 5 or 10 legal clients, and they literally, increased their revenue by 50% overnight. And I said, I'm not going to say don't do PPL, but why do PPL when that takes you into an area that you'll require a whole new set of team members, a whole new level of capability, all this sort of stuff. Let's just sell more SEO. Why don't we do that first? And they won the SEM Rush SEO legal campaign of the year as a result of that. And he publicly acknowledged the help that he had received from our consult. And once again, it was a strategic move there. Nothing overly tactical. It's just let's just get you to leverage off, or let's exploit wherever you're making money much faster, quick, and easier than to run into a new direction that may or may not suit you at this point in time. Because each time you move away from your strength, you obviously need to invest time, energy, and money to build that capability. Well, you should only do that if you've leveraged and used up all the easy wins that you already have, right? So that essentially is strategy. Right, so understanding where you create value, right? So your compensation model, a lot of people confuse their compensation model with their business model. So how you get paid versus how the whole business operates. So because they require a different set of skills and competency, and I'll share that in a sec here. So expertise in one does not guarantee an expertise in the other. And what I mean by that is, if you're paying for service, so the classic agency model, which is percentage of ad spend, I run your ads for you, and as a result, I charge you 15 to 20% of what you spend. That's the easiest one, least risk for the agency. Then comes your pay-per-lead, your pay-per-call, your pay-per-appointment, your pay-per-client. This is where we start doing signed deals. You have rev share, and then profit share, and then lastly, you have equity, where you are getting percent the piece of the action. Each one of those requires, I can write a VSL on each one of these and tell you why this is the best thing since sliced bread. But I will be lying to you if I did not audit you and realize whether can you play each game. If you've only run Facebook ads, then I got no business talk to you about equity. Because all of a sudden you have this massive gap in your capability. How many M&A deals have you done? Well, none. Okay, well, you may want to get into it at some point, but you don't have the skill set to go play that game. If you're doing anything of such as pay-per-client or rev share or profit share, you're taking on a lot of risk. You're taking on the risk of conversion, you're taking the risk of nurturing, you're taking all this extra stuff that has to be done, which is quite a bit of a different business to pay-per-service. Like if you go for pay-per-service to pay-per-lead, that is a totally different business model. Pay-per-service, I just run your ads. I couldn't care less what your funnel looks like. Of course, I want to help you because we want to make sure you keep spending money with me. Pay-per-lead, it is actually my problem because I'm actually giving you the data only, and I got to take care of all the media buying, all the funnel creation, all the tracking, analytics, all that other stuff, ensuring that I'm actually getting leads for X. And if I'm selling it for Y, then X has got to be greater than Y, right? That's my problem. When you're doing just media buying for some other company, yes, it is your problem, but it is a tangentially your problem. It's not the primary concern, because obviously the client has a lot of say in what's actually happening, right? So ensuring that when you're moving business models, that's not to say they don't make money. Is do you have the skill in that particular business model that allow you to leverage, right? So now paper X models, which is paper lead, paper client, paper appointment, or paper call. Each one of these, they're terrible value capture for the lead gen if the value follows a nonlinear distribution. What I mean by that is something like wealth management. If you ever run a wealth management funnel, and I've helped quite a few clients in this space and litigation, you're going to find because the value exponentially increases if the value of the client is higher. So, for example, if I get someone with $5 million of net assets, and usually financial planners get paid on percentage of AUM, so assets under management, $5 million. I get someone at 40, they were going to be my client till they're 80. So that's a 40-year lifetime. And I'm going to be making 1 to 2% or whatever the number is, 0.5% to 1% of a $5 million client. That's a lot of money over the lifetime versus someone who only has $100,000 in net assets. So if you're doing a lead gen funnel where you're only selling it at the fixed price, then you're actually shooting yourself in the foot as a lead gen if you're getting a whale client every so often. Because it's that whale client that's supposed to pay you the payday, because now the client is getting all this value and you're getting none of it, actually. And so that's why if you are going to do any of these paper X type markets, that you ensure that it does not follow a nonlinear distribution of sorts, or the way that you're running your campaign, or the type of people you're going after, where they're largely the same. So for example, if I'm going to do wealth management, if everybody in my funnel is going to get, it has got anywhere from 100 to 200,000, I can sell that at a fixed price. But if I'm getting someone for 100,000, I'm getting someone for 10 million, selling it for one fixed price is actually shooting yourself in the foot, because it's that $10 million guy that's supposed to pay you, because now the client's getting all this value and you're getting a very small percentage of it. And that essentially is where you're actually not being able to capture the value that you've generated for your client, right? So making and unfortunately, I've never seen anyone ask this question in any of these markets that I see. Like, oh yeah, now that you mention it, it's kind of obvious once you mention it. So making sure that if you are going to do this, you do add that into how you're distributing your clients, all right? How the value capture is being, how the deal is being done, right? If there's any questions on this, please feel free to add in the comment. Right, cool. And we covered that in Finance SOS. Execution to strategy, the go-to-market J curve. The further away you are from from your natural fit, the more you're going to put into this little investment bucket here, and you go below negative. This is where you're losing money, or you can call it investing. And so it's important to realize that when you're going to move away from your core competency, you're going to start spending a lot more money. And the idea, once again, is not to tell you whether you should or should not do that, but just be aware that when you're going to move away from your strength, you are going to be spending more money. And so ensuring that you cater for that as part of your financial plan, that your runway is going to be longer. If you've been in the startup space, or you know someone in the startup space, that's exactly what's all that's about, right? For example, OpenAI has been around for about, I don't know, 5 or 7 years or something. They became revenue generating in the last 24 months. Prior to that, they were just trying to fix the product up to really launch. So massive investments to then launch. Most of your tech type startups follow this. In my case of LeadSook, we started coding in 2016. 2015, we didn't get our first revenue paying customer till 2017. So there was a 2-year gap between when we started investing to when I started investing to when I got my first dollar back. That's not even profit. That's just getting the first dollar back. Because it takes a while to build a product that you can take to market. All right. So resource planning. Now that you worked out kind of what I want to do, what my growth plan is going to look like, well, how are we going to do that? So it's hello fantasy, which is the hockey stick graph that everyone shows you. Let's meet reality. So your revenue growth, what revenue growth are you planning? Where's the growth going to come from? Now, this is where I'm going to cover something called the level of newness. If you're already in the game and you've got a set of clients, are you going to go for the same client, same vertical, and same media, or are you going for a new client, new vertical, new media? The further you move away from same, the harder it's going to be, or the more investment and resource planning you're going to have to do, or the more resources are required. It's just natural because you don't have an edge in that space. So you want to capitalize on your moat where you've got a natural advantage. Your capability. So if it's same, you don't need much in investing. If it's new, which is a new client, new vertical, new media, you're going to need more investments in your capability to play in that space. So new talent, competency, right? Your new learning and bandwidth. If you're already working 12 hours a day, 16 hours a day, then you don't have the bandwidth. I see so many people who want to jump into this new space. I go, how many hours a week are you working? Oh, I'm doing about 12-hour days, 6 days a week. I'm like, I don't know. Do you really think you can go and do anything new? So in that case, what we do is we analyze what you're currently doing and we cut stuff that you should not be doing. A lot of people waste time on stuff that they really shouldn't be doing. Things like, spending time fixing, your tracking, or spending time fixing, your WordPress blogs and your landing pages and all that sort of stuff. Give that away. Really, generally speaking, if you're in the online marketing space, there are only 2 ways you make money. Number one is spending more money in media or looking at the media buy side, and the other one is working with clients. All the middle stuff really can be given away to somebody else. But there's a way to do that. We'll cover that shortly. Cash flow, the dreaded J curve, obviously new thing. You're going to need a bigger runway, and lastly, the return on investment. Right? Does it make sense on paper? Can you even make it work? So I had someone who was in the real estate space, and they were doing about $4 million a year in real estate. And they saw this webinar, and the webinar spoke about how you can make lots of money on picking little ebooks on ClickBank. And so they signed up to LeadSook somehow. The other learned about LeadSook. We jumped on a call, and I said, "Hey, what are you trying to get into?" And he's trying to get into potty training, as in potty training for kids, for babies. And I said, "What do you currently do?" And he said, "I run real estate." I said, "Hang on a second. You want to go from real estate to potty training? Even if you get everything right, you're probably going to make about $5,000 a month. While if you in real estate, fix the funnel up, you can quadruple the revenue currently making if you got things right." And just that one statement meant refocus on what his core competency was, which is playing in large markets. So then he went into insurance, health insurance, life insurance, and he recently exited. And I'll be sharing a bit about what he did. All right. Okay, so finance, this is the second part of the whole thing, which is you must know your numbers. So what I wanted to show here is how do you structure your P&L so that you don't panic needlessly. And I've seen that happen when I did Finance SOS. Is part of the course was there was only about 15, 20 people. And I said, hey, give me access to QuickBooks or your Xero account, and I'll review your financials for you. There was not a single person who was doing segment-based or vertical-based P&Ls. And so they would look at only this number here. So much is my revenue, so much my profit, my margin. And I said, well, hang on a second, let's split it up. When we split it up, we realized that people are running all kinds of funnels that are just not making their money. And what you can do is either you try and fix the funnel up, you can sell it off, or just hive it off, just get rid of it, and you end up simplifying your business and you just end up making more money. Or you're starting to get into these new verticals, and if you're not doing your segment-based analysis or your vertical-based P&Ls, you'll start thinking you're actually not making any money, not realizing that your primary funnel is actually making a lot of money. And it's the new funnels that are not making money. So I guess the show of hands here, I know there's only 3 of you, is how many of you are running P&Ls at the segment or vertical basis? Do you have can you log into Xero, QuickBooks, whatever you're using, and get P&L by vertical? Luke?
No.
No. All right. So, and you know what? Nobody does. It's a rhetorical question here. All right. So because of the J curve, you must structure your financials so you don't make rash decisions. And also, you know what you're investing in. Obviously, this is the P&L side. You also have the balance sheet side that shows you what money you've put into each one of these verticals. And that gives you your return on investment. Right? We covered that in Finance SOS. So your customer level analytics has to be segment centric. Why? Because of lumpiness. Without segment-based P&L, which is what we just saw, you might be subsidizing unprofitable customer segments. So what I mean by that is, if you don't doing segment-based P&L, you might be like, oh, you know what? I'm doing okay, not realizing that you're actually carrying loss-making businesses or loss-making verticals or loss-making offers, that if you could see the P&L with your at the EBITDA level, you might realize that you're actually not making much money. And that we covered in finance. Now, the only metric, and it's eight components that you need to track when it comes to finance. And this was one of the diagrams that I shared in Finance SOS, where you want to look at return on equity or return on your invested capital. And it's made up of basically 1, 2, 3, 4, 5, 6, 7, 8, 9, literally 9 different other metrics that allows you to track that number. So rather than obsessing about your return on invested capital, we look at the breakdown of where the money is, what the components look like, and we track the components, because the components layer themselves up into business activities. So you change the business activity, you change your profit margin. Profit margin is one of the things that feeds into your return on equity. The other one is obviously asset turnover, is how much money you're using to make money. Can we reduce our investment somehow? And that could be, adjusting your debt to equity or whatever. Like, there's a whole lot of balance sheet stuff that you can do that impacts your return, even if profit margin does not change. A lot of times in the marketing space, it's all about just release high ticket. Or I'm like, well, I don't know, maybe you can't release high ticket. Well, let's just reduce the investments in somehow to increase our return on invested capital. That's what matters. All right, so let's so the only metric that combines all of the metrics, so that's return on capital. That's the only thing you want to look at. So let's say, for example, if you're running a business that is high LTV, high lifetime value of the customer. Here you got a low lifetime value of the customer. If you look at just the revenue number, they might both look the same, but one has a higher marketing cost versus the other. High LTV business, generally speaking, has lower marketing costs because obviously customers are lasting for longer. Therefore, you're spending less on marketing. Low LTV businesses, they're always churning through customers, lots of lead gen type campaigns. So, but if you look at that, so even if the top line looked the same, you could see the return on invested capital, high LTV is 60%, low LTV 20%, right? But they look the same if you were just to look at the revenue number, but in essence they're not. So even your marketing metrics, that's the whole point here, that even your marketing type activities, it does layer up and feed itself at some point into return on invested capital. The problem is hardly anyone tracks this, so they actually don't know what's going on. If you optimize for this, you pretty much optimize for everything else, because you'll go back and look at the breakdown of what's actually going on in your business. And one of the questions you'll be asking is, well, hang on a second. If I want to increase my return on invested capital, maybe you can't move the margin. Perhaps you're in an extremely competitive market, and therefore you can't immediately just raise your prices. Let's say that is true. Rarely is the case, but let's assume that. Well, what else can you do? Okay, well, maybe I need to increase my nurture sequence. In fact, there was a guy in the he was in gastric band surgery type product. This is and so the doctor was complaining that, I get these patients, but they never convert into patients. They'll come in the door, they'll go for their first, 200, they'll pay $200 to get reviewed, and then they'll never come back for a surgery. How can we change that? So the lead gen funnel that I worked on, or we came up with a 365-day nurture sequence. And the hypothesis was that nobody looks at a Facebook ad on Friday and Monday morning says, "Sure, doc, why don't you cut me up and put a gastric band surgery here?" It takes a period of going through, financing, the health risks, all the other stuff. So we said, let's increase it into a 365-day funnel. And they found that almost 50% of their revenue was coming from the 6 month to the 12-month mark, because it took 6 months of really working the person to get them to the state where they're comfortable going through a surgery. And that it was essentially what made the funnel work. So sometimes slowing things down actually makes you more money. But unless you're willing to test that assumption, you'll never get there, because everybody's after the quick win, right? So just an example on when you focus on return on invested capital, you'll come up with all kinds of other ways to see how you can maximize that. Right? So even your marketing metrics layer up into financial metrics. We covered that in Finance as SOS. So how most businesses are overpaying for leads because their tracking sucks. All right. So there's a business that I was working with a couple of months ago. I wasn't involved in the transaction, but they exited recently. The 1.5 million, they got about 3.5 times EBITDA. So they walked off with $1.75 million. But as part of the sale, they wanted to fix up the low-hanging fruit and give the business in a box, so to speak, or everything completed to the new buyer. So and I've been telling them for about 4 years. They've been LeadsHook user for about 4 or 5 years. I said, hey, fix your tracking, fix your tracking, fix your tracking. It's like, oh, we're making money. Who cares? They finally fixed their tracking. Within 7 days, they ended up, reducing their cost per acquisition. So what's happening was that their traffic expense was $700,000. They fixed their tracking. They ended up getting another $210,000 worth of benefit came from Facebook or Google, and the new traffic expense was $490,000. What basically means is that rather than having 500,000 EBITDA, they would have 710,000 EBITDA. Had they fixed this 12 months earlier, that number would have flowed through into the EBITDA, which means that they literally but the contract was signed already. So unfortunately, they couldn't back out of the deal. And that means that the new buyer just made $735,000 extra that these guys lost out on. Now, imagine if you had done this over 4 or 5 years ago when I finally told them. And by fixing it, I'm talking about client side and server side, as well as tracking every interaction in the funnel. Once you do that and you send the quality of data back into Facebook and Google, they will reward you. The problem is most people think just because I've got a client side conversion pixel, my problem's fixed. It's not. You need to do client side, server side, and do duplication. And now Google recently came up with enhanced tracking. Once again, a technical part of marketing. Adding that in gives you an immediate benefit to because Facebook and Google both know what type of person we should send you. So they can guess better who your target customer is by giving them a high quality of conversion data back. Now, can you imagine if they'd done it 5 years ago? That means that they would have captured this sort of value every year in their P&L, which means that this number, I can almost guarantee you, would be much higher. They may have invested in the business. They may have started another one. They may have done, I don't know, what else could you do with $210,000 in the business? There's a massive opportunity cost of taking these things lightly. A lot of people don't focus on this. Off the thousands of funnels that I've reviewed, I can count on one hand how many where I said, you know what, tracking, tick, 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 let's move on. Almost every funnel tracking sucks. All right, we covered that in tracking SOS. Right, business process maps, identifying the bottlenecks. This is where we are looking at the operational efficiency of the business. Beyond a certain stage, all the stuff that we have in our heads starts costing us money because you're having to remember and carry everything. You got to let go. So you got to map out your business. Hardly anyone does it at a small business level. I came from the sort of the big end of town. Once you map things out, it clears your head. It becomes your training doc. You stop relearning everything all over again. I'm sure we've all done that. There's this one thing that you got to do like once a year. Could be tax return, could be logging into some platform to get an invoice. And whenever you go in there, you can never find the damn invoice, and you click like 25 times to find the damn thing. All right. Had it been documented, you could have just given it to somebody else to log in on your behalf and get the stuff for you. Right. Now, here's why you really want to be doing this. Is the era of the AI agents, and they're getting easier and easier and easier to set up. If you don't process map your business, you can't even come up with an AI agent that does that. So this is going to become a massive value add in two ways. Firstly, your business means less people, more automation, more whatever. But secondly, this is becoming an edge that you can actually sell as a capability in other businesses, should you so wish to go down that pathway. I'm not suggesting that you do that as a business, but I know a lot of guys help their clients fix themselves up so that they can continue to spend money with them. I've done that many, many times where I'm helping people fix the rest of the business so they can continue to drive more traffic, so therefore spend more money with Leads Hook. Sometimes you have no choice but to help with that. Some people have made an entire business out of it, but you can't do any of this unless you've mapped out your business. Now, this little diagram we got on the left here, this is just the accounting for Leads Hook. Right? I mean, you'd think it's on paper, it looks easy. Some money comes in, some money goes out. How hard can that be? Well, this is what it actually looks like when you break it down. You got all kinds of merchant accounts, you got all kinds of affiliate platforms, you've got payments for US, you've got payments for Aussie dollars, and then it all comes back. You got foreign currency stuff going on. And when you boil it all down, what on paper looks simple, money coming in, money coming out, looks like this kind of a mess. By the time you add all your bank recs, your reconciliations, and all that other stuff, it's a nightmare. And so you need to have this mapped out so you can outsource it to a competent accounting company or an outsourced accounting, a bookkeeper or whatever to do that for you. Hardly on focus on this. So they're spending a bulk of their time every month looking at all this sort of nonsense when they really should be focusing on either their customer, driving more traffic, or coming up with a new offer. So you can't develop AI agents without this. It's a necessity. Now, coming to the end here, with sort of the team here, you hire for attitude, train for skill. I'm sure you've heard that a million times before, right? Hire fast or fire fast, I should say, even within hours. I've done that quite a few times, where despite all of your best efforts, you've hired the wrong person, and you make it so you want to make it really hard to get in. Don't hire because it's convenient. Hire because you got the right person. My good friend Troy Dean reached out to me recently. He had a ops manager. Who was, I believe, was ops or finance or something. They're doing really, really well. And he said, I'll promote him or her, whoever it was, to CEO position. And unfortunately, the CEO role is quite different to an ops manager role. The CEO has to be much more strategic. They're an allocator of your balance sheet capital. And so finance has to be just one of their strengths. Well, this person is really good at orchestrating things, a project manager. Well, project manager does not make for a good CEO, and necessarily. So they ended up, having a bit of a drama on their hands. So you want to tolerate mistakes because that's where innovation comes in. I've made enough of myself. Most of us will if we're launching anything, but we can't tolerate incompetence, laziness, or apathy. If you get anybody who displays those characteristics, don't tolerate it, because very soon the entire team is going to be tolerating it. So you need to weed that out ASAP. I'll cover recruitment at scale. There was a module in Finance SOS. I was teaching Finance SOS. So I said, hey, how do you recruit at scale? This is how we do it inside Leads Hook. It's down to an art form now, where you look at what's the capability of the person that you require now. If it's marketing, copyright, or whatever it is, you write the job description and you write an auditioning plan. Just like you have someone who joins a dance group or a ballet or whatever. Everybody has to audition for the role. You come up with an auditioning plan. these are the set of things that you're going to make them through. Now, what an auditioning plan looks like for us is a set of steps that you go through. So milestones, so phase 1, phase 2, phase 3, can go up to 10, 15 phases. The initial phases are quite easy, and it gets much more difficult. So, for example, if I were to get a copywriter, my phase 1 would be review my landing page and give me some feedback. Or I'd show them 2 ads, one that worked, one that didn't work, and say, can you critique both ads and tell me what's good about both ads and which one, and what's bad about those ads and which one do you think worked and didn't work? Right? Literally in a 5-minute video, you can tell whether the copywriter has got any marketing chops, because can they critique properly? Well, how can they write if they can't even critique? So that would be my step 1, right? My step 2 in the audition would be okay, here's a product, write an ad, a Facebook ad, for example, to sell it, and then jump on a call and saying, why did you choose the reason that you did, and get them to break down their own work, right? So you come up with a plan of how you're going to test them. You run the job ad. Then we have a filtering decision tree. This is where we actually make them go through, and if they answer any question wrongly, we kick them out straight away. So if you go to platforms like Upwork, Freelancer, you're going to get sometimes up to 50, 100 people applying. Well, how do you filter through all that? I don't have the time to filter it, nor do I want to read everybody's replies. So what do? You just drive them through a decision tree, and they automatically get weeded out. And what you're going to find is you're going to find your top 5 or 10 person. You can interview if you want at this stage. You don't have to. And you immediately move on to the auditioning plan. I normally hire anywhere from 2 to 3 most times, but I've hired up to 10. Where phase 1 is literally a 20-minute job. So I say, okay, finish, do your 20-minute job, stop your clock, report back. And so immediately you're going to find is when you hire 10, 5 won't even turn up. And then you go to the second a milestone, or the second phase, third phase. And next thing you know, you've narrowed down to the top 2 or 3 person. And then you do your onboarding and introduce them to the team. And this is hiring at scale. So you're no longer worried about how many people I'm going to hire, or you're not even going to be worried about, am I getting the wrong person? Hire 10. So let's say if I were to get someone to do my web dev type work, like copywriting, let's say build my sites, and they're charging, let's say, $20 an hour. I'll hire 10 people. The first test is half an hour each. And out of the 10, 5 won't even turn up. So you can eliminate 5 straight away. And 5 did turn up, and they spent half an hour. Right? That's a $50 investment to find your next best recruit. For me, a very, very low cost, low investment to get the right person. Rather than trying to interview person, trying to get it right, and then you find out 2 weeks into it that it's that he or she may not be quite as good as well as they interviewed, and now you've got yourself a person you got to get rid of, and you go back to the drawing table. So you parallel process instead of serial process is what we're doing here. Right, next comes all the onboarding stuff. How do you want to do that? And we've got it all mapped out at scale. I'll be covering that very shortly. Tech, paid speed, uptime. You want to get that in place. Your scalable automations, your setup of your different infrastructure, your increased revenue, increase the longevity of the customer. Your complex thinking, unfortunately, leaves a lot of money on the table, because whenever you move to creating complex nurture sequences, which is what makes money, it actually gets a little bit hard, because obviously you got to think of different pathways and all that sort of stuff. But without doing it, you are leaving a lot of you kill LTV when you don't do complex automations. I've done it enough times to know now that actually is what. So it doesn't have to be often hard. It's just thinking through and saying, well, how else can I hit this person with another message at some point in the future? So just to give you an example, those insurance companies reached out to me. They've got about, I don't know, 50 people on the call, and they said, Nick, how do we get more money? And I said, well, what's your nurture sequence look like? And the nurture sequence sucked. It was just, sending banners. So we fixed the email copy. They ran it for about 15 days. That made a difference. 15-20% extra came through of people booking calls. And they said, oh, what else can we do? I said, why don't we just wait 30 days and rerun the damn thing again? And they just repeat that for the next every month or every couple of weeks. And that's giving them pretty much giving them a 30-40% bump in revenue just by doing that. Now that's phase 1. Phase 2 would be, let's rethink that and let's do it properly. Right? So first one is a lazy approach, get it done. And now you'd have complexity. So in that gastric band funnel that I was talking about, we actually came up with 9 different market segments of where people are based on how they answered question in the decision tree, and they went down 9 different pathways. You don't create nine pathways on day 0 or day 1. But at some point you realize, well, this path is not making money. What's the data showing me? Let's split it up. And then let's split that up. That actually happens in reality is how you do it. But without having the technical competence and capability on the team, either yourself or someone on the team, you'll never go down that pathway of realizing that those marketing goals, because tech becomes an Achilles heel. So you think of the problem that you're facing with the context. How much stress does your infrastructure need to withstand? This is where, hey, yeah, my funnel's working. Next thing you know, you quadruple your ad spend on traffic, and you start getting 404 pages. Happens all the time, right? So we covered that in Techie SOS, where we looked at building your own split testing architecture. The purpose here was not to build architecture, but to take people through the thinking of how do you build these things out. And we use largely ChatGPT to provide the code for us. So I covered that in a course called Techie SOS. Right, all this increases value. For most businesses, you maximize your capital, your return on invested capital, return on equity, or you maximize EVA, which is economic value added, which automatically increases the value of the business. For example, if you put $1 million investment, most people never ask the question is, how much money have I got in the business and how much should I be making? Now, if your bank is going to give you 5% or whatever it is, or a bond fund or whatever, without doing anything is going to give you 10%, then surely turning up and dealing with all kinds of problems that you face in business, you want to get 20, 30% minimum. In fact, if anybody's in SMB, should be getting anywhere from 25 to 30%, should be your benchmark, your threshold, or 300 grand after paying your own wages. So the financial levers, which is that I showed, it shows you where you make the adjustments. Where in this whole map of getting to 30% are you leaking revenue? Are you leaking performance? Are you leaking the return? And you fix that. And let's assume the current is 15%. Well, it could be, the result could be too much capital being used to regenerate revenue. This is the big one in most businesses. Most businesses are bloated. There are all kinds of fat sitting everywhere. So you want to cut the fat out. Perhaps you've used the wrong type of capital. Maybe you use debt instead of equity. So you take some of your money out. You take your money out, you supplement it with debt, all of a sudden your return goes up on your own equity, obviously, because you're replacing your own equity with debt, right? Or the business is bloated, or you eliminate spend or cost because of analytics. Understanding marketing analytics plus the financial analytics tells you exactly where the leaks are in the business, right? And most businesses sitting on quite a lot of return on capital that they're just not capitalizing, and they just need to see the details of where they're losing money. Right, so this is where your true investments is in your business. So what is your true investment, investment in your business? If you have a look, most of us have done this, right? We've paid for training courses, consulting and coaching, time away from our business, hobbies we've not embraced. You're not going fishing because you got to go work on something. Your sleep, your health, the sacrifices you make, time away from the loved ones, things you didn't do, for which you pay the price, like quality of your relationships, all that sort of stuff, right? The time investment you did not capitalize. This is a big one. So most people don't, as in most business owners, don't capitalize or don't have a measure of how much investment they're putting in that is not being added to the business itself. So let's say I put $1 million in, but let's say as a consultant, my hourly rate is, let's say, I don't know, $50 an hour, to pick a small number. And if I'm working rather than 40, I'm working 80 hours a week. Well, take that extra investment you've put and as a exercise and put it back into the investment in the business, right? So what you're going to find is the more the returns don't come, the bigger and bigger and bigger your investment number becomes in your business, which is the higher and higher and higher your return on invested capital gets harder, right? And so you're over investing through time now, right? So all the extra hours you didn't get paid for. And obviously in your own investment, there's a cash investment and the investments you lost along the way, i.e. the offers that didn't run. You want to keep track of those. So true investment is many times your cash investment, right? So the question to ask is, how big is your number? Most people don't know this, obviously, but it's many more times what your investment is. Right? So it's time to get returns on your investment. Focus on what truly drives value. the 6 things we covered today. Get your strategy and direction right. Only play games where you can win and where you can win big. So that means going after the solar funnel and not potty training. Because the amount of effort it's going to take you to go into solar versus the amount of effort it's going to take you to potty training, it's pretty much going to be the same. Perhaps solar is going to be a little bit more, but if you win, you hit out of the park because the market is so big. Also, there's lots of buyers and sellers in solar. There's not a lot of buyers and sellers sitting in potty training. So if you ever want to have a partner, an acquisition, investment, debt to get out of the game, there's always someone out there who is available to buy your asset out. It's a very rich ecosystem with players at every level. And I'm a big fan of that. Like, don't get into the business, and that's part of the strategy you're going to do is don't get into something unless you can get out of it. And if you want to get out of it, well, then you need to understand who are the buyers and sellers. All right, so financial metrics to ensure you're not BSing yourself, that you're actually making money when you're not. It's time to step up, make 2024 count. You plug the holes, tracking analytics, and not lose hundreds of thousands of dollars or more. Almost always is millions of dollars in most cases after you plug the holes. Planning your growth so you're not going from one cash flow crisis to another. Marketers are really good at this. They know how to launch an offer. So they, replace, you go from offer, next one to the next one to the next one, never really, getting steady state where you're not constantly running from cash flow crisis to cash flow crisis. Stop playing the cash rolling game. I've seen that in a few of the funnel reviews that I've done. They launched a revenue, but it's a low profitability business. So every month, all they're looking to do is just sell more. So cash comes back to pay taxes, pay themselves a little bit and pay their team. And the next month, they're once again running after the revenue again. And the reason why they're doing that, because it's actually a low profitability business. They don't do any P&L balance sheet analysis to know that it's a low profitability. They just look at the ads manager, and oftentimes it doesn't show the true profitability. Team hiring the right people at the right time without pulling your hair out. We covered aspects of that. Exploit your technological advances. Ultimately, the person who has a differentiated offer wins. Technology just makes it easier. It's a leverage point. I think anyone who's used ChatGPT in any amount of detail knows that is going to win. All right, so what should you be making? All right, if you have a $1 million investment, $200,000. Now, you got to deduct your salary at market rates for all the jobs that you're doing. I do this exercise for all of the consulting work that I do. Don't do much of that anymore. But this is where we look at saying, well, how many hours, what jobs are you doing in your business? And oftentimes you talk to a business owner, they're an accountant, they're a marketer, they're a bookkeeper, they're a salesperson, they're a operations person. Every bloody thing stops with them. I said, okay, well, if you were to fire yourself from those jobs, what would you be spending? Next thing you realize is an extra, easily from $5,000 to $15,000 of extra expenses that they would incur if they fire themselves from their own work. You want to add that back into your P&L, and then you want to look at what your profitability number looks like. And then you want to look at the return on investment, because by doing all this extra stuff, you show profit when there's actually none there, because you're obviously buffering the expense side by doing all the heavy lifting. Even if you don't physically go and hire someone, for your own analysis, you want to add that back in there. You want to adjust that. And the other reason to do that is because your prospective buyer of your business will do that. They're not going to give you a free pass. You're going to say, well, who does the bookkeeping? Oh, I do. Okay, well, I got to put a bookkeeper in there. Who does all your media buying? Oh, I do. Okay, well, I got to put a media buyer in there. Who does all of your packing, sending, and making sure that everything's running well? Okay, cool. So you're an ops manager too. Great. Ops manager. I'm going to put that in there. And then they're going to deduct and come up with the true profitability number, and they're going to pay you a multiple of that. And in some cases where after you do the exercise, people have a loss-making business. And so that essentially what happens, all right? All right, so part of all of this is obviously to give you this information so you have something to think about, but I do want to introduce a live training that I'm going to be doing. This is pretty much my last training for 2024 because LeadSook takes more of my time now. It's an in-depth training program. Week 1, we'll look at audit and strategy. Week 2, we'll look at the financial metrics, closing the gap. Week 3, where we look at your return on invested capital needs to be versus where you are. Week 3, we fix your tracking and analytics, perform a fast and easy self-diagnostic, server-side, client-side, TikTok, Facebook, whatever it is. We leverage the technology that you're using in your business to make it go cheaper, faster, and easier to run. There's a lot we can do there now. Week 5, we operationalize people at scale. And then week 6, we finally fix your marketing. And the reason why we're doing marketing last is because unless you've got a big bandwidth to handle more revenue coming through, oftentimes, that's not to say that marketing should not be fixed or can't be fixed. Sometimes you fix your marketing and you realize you're getting 404s, you don't have enough capacity to do the job, you're falling behind in your deliveries or your fulfillment, and all your marketing ad spend is just wasted, and you finally hit a campaign that you can scale. And that's why I often am a big fan of fixing the marketing last. Now, but as part of the audit, perhaps marketing is the first thing you fix. You move your order around. Obviously, everybody has to run their own thing. And so then at that point, it's pedal to the metal. So you're not going back to the drawing board every time you break your business and your peace of mind. This is a common problem. People optimizing for the next big phase without truly fixing the bandwidth of the business. Right. So when you join the program, we have 6 weekly calls plus a Q&A, 1 to 2 hours of teaching, 1 to 2 hours of Q&A calls. Anyone who's been on my live training knows I don't get off until I answer your question. Sometimes our calls go for 3 hours. And if that's what it takes, that's what it takes. Obviously, the private Facebook groups where you can ask questions. I do add a lot of videos. If you do ask a question that I may not have covered in the course, I actually make a bonus module out of it. That's why a lot of my free trainings, they start with no bonuses. By the time we finish, there's about 10 bonuses in there because it popped up from a question that someone had asked. So the Finance SOS course I taught, there's I think 1 bonus when we started. By the end of it, we had 9 bonuses. It's because there were questions such as the recruitment, all that sorts of stuff. So we begin with the audit. We'll map out what your weaknesses are so you know where you need to move the needle. Then we go to the strategy sheet. I'll share that with you very shortly. You plan all the actions that prioritize. What is the magical order that maximizes your payoffs? You can't do everything at once, obviously. And we go from survival, competency to capability. This is where you build your skill set and capacity. And it's the access to, it's these 3 courses that allows us to do the first 3 parts here. And so the Q&A, obviously, I just creates the bonuses. And why I do these live courses, you ask, I'll create it for you, essentially. So the strategy sheet looks a bit like this. There's only 6 ways you make revenue. You do market penetration, product extension, product expansion, product penetration, market development, horizontal integration, vertical integration. No one ever thinks of these other ones here. Horizontal, go buy out your competitor. But one of the fastest ways to grow, no one ever thinks about. Because here's what you look at. You look at a business that's on sale. You look at the number of customers they have. You divide it by the acquisition price. You get a cost per customer. Well, what's your cost per customer? Sometimes just buying out you'll get 25% of the cost in running Facebook ads. Hardly anyone considers that. Right? Obviously, you look at your engineering and your dev of the business. We look at the people side, operations, look at risk and uncertainty, and you finally look at the finance, tax planning, all that sort of stuff. We covered that in Finance SOS. Look at all of this stuff, put it here, and you prioritize, and we see which way we're going to go. Now, amazingly, there's about 20 marketing channels for everything you want to get into. We have a marketing channel tab here that has about 25 different things you can do, or 20 things. And based on the action step, you decide what you want to do. There's about 20 different ways of executing that strategy. It's not always about Facebook ads and Google ads, which is what everybody thinks of. So we look at all of that. Let's talk numbers. Can you get this type of true business growth training? I don't know anyone who's doing it. But I do see a lot of technical training programs. Here's the AI to get more people to convert. Here's how to run your Facebook ads. Very few business level programs that are being done. And that's not to say technical programs should not be done, obviously, because they teach you technical things which you can use, but only after you get the direction right? So this training is all about getting the direction right. You can put any technical program you want into it. You can hire me. I used to do this consulting for $15K a month. I no longer do that anymore because the business requires a lot of time. I was doing this largely to learn what are people struggling with and what can I do to add more features into Leads Hook, or what are the other things that we can do to help businesses out. I've done about 30, 40 of these now, plus thousands of reviews across in 25 countries. So I no longer need to do that anymore. I know exactly what who my customer is. Or you can hire someone else. Plenty of coaches who charge 5 to 20K a month minimum spend with a minimum investment period, 3 months, 6 months, 12 months, few masterminds. But you still have to do the work. You have to synthesize and execute, right? You go to a mastermind, they share a strategy. It's your problem now to go back to your business, somehow find the team that's going to help you execute. So now here's how you can get the Growth SOS for free, the entire training program for free. The in-depth program that I do, such as the tracking, techie, and all that, the 3 programs that I've done, they are not lead specific. They're designed to give you mastery level capability. The 3 main technical capabilities that are missing is tracking, techie, and finance. You buy the bundle, you get this whole thing for free. The reason why I'm doing it for free is because because I'm going to be referring back to those things. Okay, well, go to module 3 for server side. Go to this module to get the AI, techie stuff done. Here's how you do your balance sheet and P&L restructuring. Go to this module in Finance SOS. We can't do growth without that. Otherwise, this whole program can turn into an MBA program, which we don't have the time for. So that's the reason why I'm doing this for free. Get the bundle, get the whole thing for free. Plus strategy orchestration for maximum value creation. Oh, and also comes free for the team. Sorry, the typo here. Just invite your team. No point having all this knowledge in your brain alone without the team. So take the team along with you. Increase the odds of hitting your return on investment numbers. Why join today? One-of-a-kind training, complete holistic. Almost never to be repeated. I've never repeated any of my training programs. I do it once, I record it, that's it. And certainly not at this price. And you're not reaching your business goal. This is something that's missing. Join and take the audit to find the gap, and you spend the next 5 or 6 weeks to close the gap. It's a no-brainer for the price of free. Plus, you take your team along with you. That's the whole point of this. This is not a Lone Ranger program. Investment, 6 weeks training, live mastermind level without the mastermind price, weekly Q&A. You get the whole thing. You get techie, tracky training, the whole bundle, detailed training. Anyone who bought the bundle. So if you've bought any of these things previously, just reach out to us. You get a special link to buy. If you bought all 3, you get it for free, obviously. Currently discounted to receive growth for free. Anyone who bought one course gets a special discount code. Email coming soon. It's basically $2,999, which is the bundle, and I throw in growth for free. Just to show you what's in the other training programs, I'm going to quickly cross over to show you what that looks like. This is tracking. We cover how to use ChatGPT to do all your scripting. We look at Google Tag Manager. We looked at Facebook, TikTok, LinkedIn, Bing, Snapchat, tracking, Outbrain, Taboola, Reddit. It's client side and server side. If this is not your thing, you don't enjoy this stuff, get a team member and get them to go through this. And all of a sudden, you've got yourself an extremely well-resourced client-side, server-side trained person. Or if you are selling services as a marketer, that's an extra value add on your team. Help your clients fix this. Your ROAS numbers changes. You can even charge for it. Or if you're doing percentage of ad spend, percentage of conversions, fixing this stuff up, collect more cash. Nice and simple, easy win. So you get that. You get Finance SOS. We looked at personal finance, investments, you did business valuations, we looked at reformulating of your financials. There's a very particular way in which I like to see financial statements. We covered that. Business process mapping, return on investment stuff, all the financial analysis. Someone reached out during the training program who was an agency. He said, hey, it's great we're looking at all this sort of stuff. So I reached out. I said, hey, if there's anybody here that wants me to review their financials for free, please reach out. First person in gets a review. Someone reached out to me. I ripped out the entire balance sheet P&L. We created a cash flow forecasting, and then I created the 8-9 metrics that we look at for the agency. Look at the valuation. Where does it come from? Unit economics. This is the pain in the ass premium. It's the cost of capital basically that you need to look at. We looked at time value, the different ways in which people value your business. We looked at discount cash flow models. How do you look at investment as a strategy of increasing the value of the business? My background is in finance. I got a maths degree. We covered a heavy duty stuff here. And then we looked at how you launch campaigns and all that sort of stuff. You look at the profitability litmus test. A lot of people don't do a litmus test when they're looking to launch a product. Well, what's the chance that this is ever going to make money? Let's look at it on paper first before we do it. And then once you launch it, how do you analyze the numbers as you are launching it? So you make sure that if this is a dud, kill the campaign right away. Why spend good ad spend behind bad ad spend? Then the techie, this is done as case studies, where I look at case studies. So we looked at how to set up your own internal split testing. The goal here is not to set up your internal split testing, but I use that as a metaphor to show people how you can actually really use a little bit of understanding of technology, use something like ChatGPT these days, and build an entire code based in your own app. Actually, this is largely a server-side tracking app that we built just through 6 or 7 videos. You see that, but the main part of this was this one here is where we looked at why do this. Because sometimes you can go and buy an app out there and you're spending hours of your life trying to get the implementation done. It's cheaper, faster, and quicker just to execute something like this. And then go, yep, that actually brought me a lot of value. Now I'm going to go hire someone who knows, for example, some optimization app out there and get them to implement it for me. And so this is the optionality that a lot of businesses aren't capitalizing on. So we looked at that. And that's part of this program here. Just to kind of go back here. 2999 basically is what that is. There's a bundle right here. I'm going to add the link here if anybody's interested to join up. We start on 1st Feb, so it's a bit of and we cover all of this. Of course, you get access to the courses right away. There's the link right here. We look at and you get essentially your tracking, finance, and techie right now. Gives you a week or two to absorb at least the first few modules of that, and then we get started here. Obviously, I put a bit of decoy pricing here. Obviously, don't get the one on the left, get the one on the right. This has been selling really well at 2999, and I'm just adding the whole growth thing in here on top of it at the same price. If there's any questions, please feel free to ask me. Hope this was offered some value as to how to really, move the needle in at the business level, not just marketing. All right, any questions? If you feel free to unmute, anything about the program, anything about the topic we've covered, please feel free to ask or yeah, no, awesome, Luke, awesome. Albert, any questions? Mel, you're a seasoned player, you might not have any, but happy to receive some feedback. Sorry, mate, you're muted. Let me unmute.
No, mate, I'm more observing what's going on here. I know we've got a call with you later on in the week with my partners. So okay, I just want to sit in and because I'd like to understand what's going on, even though I want to have nothing to do with it.
Yeah, no,
so
fair enough.
It's very helpful.
Yeah. Okay, cool.
I've got some comments probably privately if you want to know, but I'll leave it.
No, sure, absolutely. Yeah, no, absolutely. I don't do this very often actually, so this is not something I can't share an expertise. I'm more run cold traffic and get the funnel to convert for you. Live selling is something I'm actually a bit of an amateur at actually, but that's something I'm yeah.
It shows, and I agree with you.
No. Yeah, cool.
All good fun, mate. We all do what we do,
Yeah, exactly. All right, Luke, any questions? Sorry.
Can I make an observation, if you like, just a conversational observation? I've created a thing called Mal Emery's Web of Wealth, and what actually does drive all business is principles. And what you've messed with is strategy, which is great. And I love your definition of what that means, but it's all driven by principle. And believe it or not, you're actually mentioning some of those principles that I've defined down to about 43 of them that drive everything. And of course, the reason for that is a thing I call autonomy. So right in the middle of that web is your autonomy, and my autonomy will be different to yours and everyone else listening to this. So the first thing you need to understand is, what does your autonomy look like? So these days it's, it's very different to what it was when I was out there doing this. I don't coach anyone these days. Nick, and haven't done for 10 years. I sold that company. But I do strategic alliances. So, you know, my autonomy looks very different. For example, my wife and I have a farm. You know, I mean, that wasn't on my list back then. So again, you've got to get clear on autonomy, and then it's driven. Your autonomy is driven by the principles, which are driven by the strategy, which are driven by the tactics that are the field soldier that goes out there and does the work for you. And just to touch on a couple of the principles, in my language, which is portrayed in your language, is nothing trumps mathematics. Okay, the maths drive everything. So tell me to bow out anytime you like, Nick. And another one is you're an investor. You must come from the investor mindset, because everything I build it to sell it. And I figured that out at 22, 23 when I sold a hardware store that I started from scratch for $32,500, which, you know, buys you a house back then. So, and I'm only 24 or something at the time. So I figured that I could make more money selling the sucker than owning it. And I've then lived that through all my life, through my business life. I'm around about 35.
That was also my focus of in the Finance SOS course that we did, is that a lot of people don't realize that they are building an asset, and they are often just kind of, it's about, let me make the profit here, rather than realizing, well, hang on a second, what does your business is the product, and how do I increase its value so it can be sold to the next person? And sometimes you're better off just selling it and then restarting it again and selling it again. There's a guy that I know in the SEO space. He's a LeadZook user. He actually buys sites that are just got AdSense revenue on it, and he improves it, and he sells them in 18 months. And he does about 2 or 3 of those a year, and that's far faster because he just 3x's them, but he's 3xing it 3 times a year, which is getting to multiples, which is kind of like a SaaS software tech company level multiple, except rather than doing that multiple in one business, he's doing it by churning that money, rolling the money so much faster. And that is, so you're absolutely right. It is the investor mindset. Yeah, absolutely.
So Liz and Matt Rudd teach that. They're ex-clients of mine when I was doing it. They used to come to it. They've been very successful teaching it all over the world, you know, how to renovate websites or whatever it might be, AdSense, and add value, and then sell it for a ton of time. So that's a thing.
No, just one second. I just want to ask, Luke, do you have any questions? I know you unmuted your mic. I just want to make sure we cover that. Sorry, your mic is unmuted.
Yeah, I think. Can you hear me now?
Yeah, I can hear you now. Yeah.
Yeah, no. Look, I was just going to say, Nick. Look, you know, no questions for me. I mean, I was just more for interest sake. I'm not ready to jump in the course yet, just in terms of my business. But you know, good points there from you, Mel, as well. Very interesting. So thanks, mate.
Cheers. Thanks.
No worries. Thank you. Albert, any questions?
Yeah, I mean, do you have a? Can you go through the overview for the multiple weeks again?
Sure. Absolutely. Absolutely. Let me just quickly bring it up here. All right. Oops, that's there you go. This here. So the first thing we do is we do we go through an audit to identify the gaps, and the reason for that is because whenever I've exited quite a few companies, and I have grown quite a few companies to exit. And whenever you do an audit, you realize that, you know, obviously everybody has different problems. Sometimes it's a matter of fixing your HR, sometimes fixing your finance, sometimes fixing all of the above. So we go through that just to identify where's the quick win going to come from in your business. Even in the Exit SOS that I covered, that I did a couple of weeks ago, we looked at one person, we went straight to marketing, while other people, we went into fixing up their P&L and balance sheet because it was just all over the place. While others, we're fixing in the operational stuff. So I helped them hire a finance person, and we went through all that. So that's the reason for the audit. We look at essentially your tech, we look at finance, we look at your marketing, we look at your tracking analytics, we look at your team, And we look at essentially, do you have a direction that you are clear on as to what you want to do? Why are you doing what you're doing? And what's the end point? Right. So that's the first thing. From that comes obviously your strategy is where you're what's the direction of the business going to go in. And then we work out a plan to fix it. The usual order that I go in is we track the numbers because that applies to most people. Most people don't know what the numbers are. So you fix that up and we identify what the gap is. And then the next phase after that is going to be, oops, let me just, the tracking analytics, we fix that up. So you start getting better numbers. That's either finance and or marketing. And then we leverage the technology side of things. This is where I might, get you to look at techie SOS. And then finally, the team part, because you don't want to be doing everything yourself. And in fact, anytime you do it just yourself, you really destroy value as well. Because if the business is all around you, then you effectively go to sell. The buyer is going to say, so you want me to buy a job? And and essentially ends up becoming you trying to sell a job rather than sell a business. So we want to get to a level where you have largely operationalized people, and then final piece comes marketing, because once you build the bandwidth, the marketing just becomes the sort of gas that you put into the entire business. And we look at, there's quite a bit of marketing content here as well. I didn't cover it in the call because most of the audience that comes here is the marketing stuff. Does that kind of break it down for you as to what it looks like? Now, I'm really tied to the week that we do. If something pops up and we realize I got to spend more time on a particular topic, then either we'll have an extra session. So I'll be like, okay, listen, rather than this week, we'll add an extra session in. I'll jump on, add an extra bonus call in, or post 6 weeks, I'll add another week or 2 or 3 weeks on. I've done that in the past. The tracking course. We started with 6-week course, ended up being a 9-week course because just with the number of questions that we were getting and the number of help that was needed. So I'm not tied to this. I'm here to make sure that you get most out of what we're doing. So if there's anybody struggling, I help you jump along the way. Of course, there's a Facebook group where you can post your questions on. If those questions can be answered straight away in the Facebook group, I will. Otherwise, we'll jump on a call and do an extra session or 2.
So is it the week 3 tracking and analytics? Are you talking about business metrics? Or are we talking about ads metrics?
No, business is week 2, ads and stuff is week 3.
Oh, okay. So the techie side of things is week 3.
Correct. Week 3, yeah, correct. Yeah.
So the Facebook group is different from the leads hook group, is it?
That is correct. Leads hook group is just about leads. So this is going to be a new group. It's called Growth SOS. Of course, when you get the bundle, you get access to the tracking group, the finance group, as well as the techie group, because they were all separate courses that were done at separate times. So they had their own groups as well. So that way, if you have any specific questions around one of those areas, just post it in there, and I'll jump in and make a video or whatever. So I guess suppose the reason why I'm doing this is because too many people are leaving the industry or leaving a lot of money on the table, or just not getting the value that they can get out of the technical stuff that they've learned. Because I'm sure you've bought enough courses out there on how to help you with either a Facebook ad or Google ad or AI bots or whatever the heck it is. Yeah, but let's use all that. So it's almost utilizing the investments that you've made, or that stuff you've never been able to execute. That's what this is about, actually. Yeah.
Actually, I got a question.
And one final point, which probably wasn't clear. None of those courses are leads hook centric. So the tracking course has got nothing to do with leads hook. Yeah, I may cover a share thing or two about leads hook in there, but it's not a leads hook course. It's nothing to do with leads hook. They're generic courses because not everybody that buys courses from me is a leads hook user.
Right. Actually, I kind of came to this call thinking that it's going to be more lead hook stuff, but it's kind of interesting you're talking about this, and kind of opened up my eyes. But
of course, there's an application to leads hook. Yeah, obviously, because if you're going to learn this, then you apply it any way you want. But you can apply it any way you want. Let's say, for argument's sake, tomorrow you're using some new app and you need to somehow integrate its tracking. Well, you can ask the questions of how to go about doing it, if that makes sense.
Yeah, I mean, I'm currently using leads hook at the moment. I actually have a question for you, if you don't mind, about leads hook.
Yeah, no. So I'll put it here so that we don't take it away from the from the just send it to me here, and I'll sort out the lead hook stuff. Make it run my database. Just email me on that.
Sure.
Yeah.
Yeah. So this is kind of looking to take current business and then kind of moving it in a different direction. Is that how it is? Because I'm kind of thinking of using. I'm kind of thinking, because this year I'm kind of changing my business to a different niche. I mean, different area, right? And then I'm not sure.
So I guess the question that we'll be covering is why are you doing that, and those sort of things, right? And so, is that really the right decision for you? Here are the things you need to be considering. That's not to say whether, of course, you decide what you want to do with the business itself, but there's a framework that you want to think through, so you don't end up wasting time in a new niche when there was something else that was a better fit for you. Or had you known, because a lot of decisions, a lot of the what kind of business I want to be in is often made without too much of a thought. It's like, oh yeah, blah blah blah. Guru said I can make lots of money doing ABC. Let me go jump into that. And oftentimes, like, well, yeah, and you don't have a natural edge, and perhaps it's something to do, but now let's go get the edge first before you start doing it. Otherwise, you end up wasting money and time.
I mean, I guess what I was trying to ask is that do you require, if you're doing like case studies and such, if I'm going to use this for a different business, for a new business, do you require numbers to kind of make to do the whatever it is you're doing in the 6 weeks? Do you know what I mean?
No, you mean to say if it's a new business, can you do it?
Yeah.
Yeah, absolutely. Yeah, that's the whole point. That's the whole point. Yeah. Is ensuring that if you are going to get into a new business, that you do make the right choices, that you know what the hell you're getting yourself into, and not end up building something that you didn't have a natural edge in. That's the whole point.
I mean, I guess for me, it's the business already been the new direction, or it's a separate business entity anyway. It's kind of already been decided. So I'm just thinking of this is kind of pointing it in a. I mean, I guess like I said, sometimes it's more important to know what you shouldn't be doing versus what you should be doing. Do you know what I mean?
Correct. Yeah, absolutely. Now, even if you have decided on the vertical, for example, let's say you decide to go into X, what is the next step to get into X, right? And is that the right?
Just to kind of give you a little bit more context, it's going to be going towards more selling local business PPC, Google PPC, right? So I've been kind of doing more of the Facebook side of things, and then we're going to go into the Google side PPC type of things for local businesses. So that's kind of where I'm thinking, okay, there's a big area, a lot of things we can look at, but in my experience, we kind of have to eliminate the low return investment type of things and just focus on a big potential rewards, and then kind of knock it out from there.
I suppose just on that, I would say is like, obviously it's hyper competitive. Everybody does that. So what's your edge there? Why would you win that game? Is the question that I'd be asking. Sorry, I don't mean for you to answer. It's a question for you to ponder on. Yeah. That makes sense.
I understood. Yeah. That's a very common question, but we do have a competitive edge in this.
Okay, good. Anyway, cool.
I guess my point is that business unit is just starting off. So if we're doing, let's say, metrics and doing kind of revenue projection, all that stuff, if you have an existing business, you got numbers to plug in. In this case, there's no really numbers to plug in. So
it's quite easy to get those numbers. You can just go to a business broker and say, I want to acquire a business that does PPC, and they'll share the numbers with you, and then they're your numbers to project from.
Okay, gotcha. Understood.
Simple. Cool, awesome. Well, hopefully you'll join us, and look forward to taking you through the program.